And as we witness the biggest fall in 2 months in the markets with financials and banking stocks tumbling, what should investors do? We had a word with Suresh Ganapathy from Macquarie Capital about some of the better bets when it comes to the banking sector. Listen in. When we're looking at the basket, if there's a particular strategy you'd see the financial pie with at the moment, because on one hand there's been a resumption of course in interest when it comes to the retail loan book, to the kind of profitability with the changing rate scenario as well. Is there a particular part or segment of the financial pie that you think will benefit going forward?
Well, on the contrary, I feel more than the benefit, I think the bigger issue could be on the corporate loans, because some of the capex related loans which we thought would come back because rates were relatively okay, and at the margin some incremental capacities could gather steam. Unfortunately, that takes a backseat because of the current environment, both on the macroeconomic front and also what is exactly happening with respect to the rate cycle. As well as the growth drivers are concerned, I think a couple of years, during the COVID period, clearly banks had to shy away from unsecured credit. We have clearly seen the risk appetite for the banking system also picking up, and also at the consumer or the demand level, you are seeing rise and pick up for unsecured loans. So I think within the broader risk parameters that banks cater to, largely selling to internal customers, and also you've all seen a good pickup in mortgages over the course of last couple of years. I think retail will continue to be the support system for the banking system when it comes to growth, and within that you will definitely see, even though there are it's a rising interest rate environment, I do believe that on the supply side banks will be a bit more active trying to do some of these unsecured loan business, and therefore that is also going to be a good growth driver over the course of next couple of years.
Suresh, if you had to pick one stock or your top 3 right now when it comes to the financial basket, and I'm not asking you to give a recommendation, but I'm trying to get get from you something that you are just amazed with in terms of traction, the story, the kind of turnaround they've seen, any story that you like that you can share with us, the top 1, 2, 3 names right now.
Yeah, so I'm still sticking with the large conventional ones, because it's like I do believe that the FANG model will work everywhere. I mean, in the sense that the large ones are going to become larger and bigger, and they will dominate, and it makes more sense to stick with the larger ones over a longer term time period. So obviously near term concerns are there for HDFC Bank, for that matter for the entire sector, because of a rising rate cycle, but I still believe that HDFC Bank and ICICI Bank are going to be the eventual winners if you were to really look at from a 5 to 10 year perspective. So these should be core holdings in my view. But I think beyond that, if I were to really look at a bit more favorably towards some of the cheaper names, cheaper valuation names, I believe that it's SBI and IndusInd Bank. I guess SBI has done exceptionally well this year fundamentally, so I'm very surprised to see the kind of underperformance that's there across the financials. So SBI clearly stands out to me in my opinion, and also IndusInd Bank. They've done pretty well. They're also emerging out of a bad cycle when it comes to the corporate asset quality cycle, or for that matter the MFI and the commercial vehicle space. I think cyclically you're also in a good position, and they also run a very high operating profit model. So yeah, these are the 2 picks beyond HDFC and ICICI where I will clearly be bullish over the course of next 12 to 24 months.